Welcome back to Smart Dollar Mindset, the channel designed to help you take control of your money, build wealth, and achieve financial freedom through smart habits and informed decisions. If this is your first time here, make sure you subscribe because we create content that empowers you to understand money better than ever before. Today, we're going to break down something that seems simple on the surface but is often misunderstood by millions of people: your credit card statement. Every month, credit card companies send out statements, and most people glance at the total balance and due date, then toss it aside. But here's the truth: your statement is a powerful financial document packed with critical information that can either save you money or cost you big time if you ignore it. Understanding your statement isn't just about knowing what you owe, it's about protecting yourself from errors, fraud, and hidden costs, while making smarter financial decisions. Whether you're a credit card beginner or someone who has had cards for years, learning how to read and interpret your statement is a game changer. By the end of this video, you'll know what each section of your statement means and why it matters, how to spot errors and charges you didn't authorize, the difference between statement balance, current balance, and minimum payment, how interest is calculated and why paying attention to dates is critical, strategies to use your statement as a financial tool instead of a stress trigger. Let's dive in and make credit card statements work for you, not against you. Why reading your credit card statement is so important. Before we go section by section, let's understand why this matters so much. Your credit card statement is not just a bill, it's a financial snapshot that tells a story about your spending habits, your payment history, and even your vulnerability to fraud. Ignoring it means you might miss unauthorized charges, over-limit fees, or interest calculations that are costing you more than you think. And here's another reason: your statement is a key document for building credit. The information reported to credit bureaus, like your balance, payment history, and credit utilization, all originate from what's on that statement. So, this isn't just paperwork, this is your financial reputation in written form. What's included in a credit card statement? Every credit card statement, regardless of the bank or issuer, includes similar sections. Here are the major ones: account summary, payment information, transaction details, interest charges, reward summary, if applicable. Each section has important details you need to understand, so let's break them down step by step. Step 1. Account summary. The account summary gives you an overview of your credit card activity during the billing cycle. It usually includes previous balance, what you owed at the start of the cycle, payments and credits, amount you paid and any refunds, purchases, total amount spent, fees, any late fees or annual fees charged, interest charges, how much interest you've been billed this cycle, new balance, the total amount you owe now, available credit, how much credit remains after your spending. Real life example: imagine your summary shows previous balance, $500, purchases, $800, payments, $400, new balance, $900. This tells you that even though you made a payment, your balance grew because you spent more than you paid off. Understanding this helps you adjust spending before it spirals out of control. Step 2. Payment information. This section includes statement balance, the amount you owe for the current cycle, minimum payment due, the smallest amount you must pay to avoid late fees, payment due date, when your payment is due, why it matters. Paying only the minimum keeps you in debt longer and racks up interest. For example, if your balance is $1,000 and your APR is 20%, paying the $25 minimum will take years and cost hundreds in interest. Pro tip: always pay the statement balance in full to avoid interest completely. Step 3. Transaction details. Here you'll find every charge, refund, and payment during the cycle. Review this carefully because this is where you catch fraudulent activity or errors. Signs of trouble: charges from unfamiliar merchants, duplicate transactions, fees you weren't expecting. If you see something wrong, contact your credit card issuer immediately. Step 4. Interest charges. This section breaks down how much interest you've been charged and on which balances. If you paid your statement balance in full last month, this section should show $0, which is exactly what you want. But if you see interest charges, look closely at the APRs for different categories: purchases, cash advances, balance transfers. Understanding this helps you prioritize which balances to pay off first. Step 5. Reward summary. If applicable, if your card offers rewards, this section shows how many points or cash back you earned this cycle and your total balance. Use this to track benefits, but never let rewards tempt you into overspending because the interest you pay will outweigh any perks. Common misunderstandings about statements. Statement balance versus current balance. Your statement balance is what you owed at the end of the cycle. Your current balance includes new charges after the statement date. Minimum payment misconception. Paying the minimum does not keep you interest-free, it only avoids late fees. Due date confusion. Missing your due date by even 1 day can trigger a penalty APR of 29.99% or more. Real-life impact of ignoring statements. Let's say you don't review your statement and miss a $10 fraudulent charge. It seems small, so the scammer keeps adding small amounts every month. Over a year, that's $120 stolen from you. On top of that, you might miss your due date and get hit with a $35 late fee plus a higher penalty APR, costing you hundreds. A few minutes reviewing your statement can prevent all of that. How to use your statement as a financial tool. Track spending habits. Your statement shows where your money goes. Use it to budget. Spot trends. If you're consistently carrying a balance, it's time to rework your spending plan. Improve credit score. Pay attention to utilization. Keep it below 30% of your limit. Pro tips for statement management. Go paperless for security and convenience. Set up alerts for due dates and suspicious charges. Save statements digitally for tax purposes or disputes. Reading your credit card statement might seem like a small task, but in reality, it's one of the most important habits you can develop for financial control and security. Each statement is a roadmap of your spending, your habits, and your progress toward financial goals. Ignoring it means driving blind. You might not notice you're heading toward a cliff until it's too late. By making it a habit to read your statement every month, you're doing more than checking a bill. You're protecting yourself from fraud, avoiding costly interest and fees, and making sure your credit health remains strong. Remember, financial success is built on awareness, and awareness starts with information. Your credit card statement gives you that information every single month for free. So don't ignore it. Use it. Study it. And let it guide you toward smarter decisions. Combine this with budgeting, saving, and investing, and you're on your way to true financial freedom. If this video helped you, hit that like button, subscribe to Smart Dollar Mindset, and share it with anyone who needs to understand their credit card statement better. And check out our other videos on credit, budgeting, and wealth building strategies that will completely transform your financial future.